When you're looking at reverse mortgage options, why might you choose to get a jumbo reverse mortgage compared to the home equity conversion mortgage, also known as the HECM loan? My name is Tyler Plack. I am a reverse mortgage expert, and today we're going to do a deep dive on the jumbo reverse mortgage programs. One of the first key differences with the jumbo reverse mortgage is the jumbo reverse mortgage is not subject to the FHA lending limit. That means that if your property is valued above this, then the additional equity in your property may not be able to be lent against. In other words, if you have a $1.5 million property, we're only able to lend against about $1.2 million of the property's actual value. That could mean that we're leaving equity on the table, aka cash that could be available to you. The second key difference on the jumbo reverse mortgage compared to the HECM reverse mortgage is the ongoing MIP. HECM loans have, since 2017, had a 0.5% ongoing MIP charge. That is a number that gets added to the interest rate every month on the loan. Now, the jumbo loans do not have ongoing MIP. This can be a source of savings on the jumbo reverse mortgages when compared to the HECM. Now, one thing to note for the ongoing MIP for HECM loans compared to jumbo loans is that you want to make sure that you're making an accurate comparison. You want to consider the ongoing MIP on the HECM loan, but remember that jumbos often carry a higher interest rate, so there may not actually be savings here. You should compare the effective rate on the HECM to the jumbo loan to figure out which is a better interest rate for you. One of the other key differences with the jumbo reverse mortgage is that there's no initial mortgage insurance premium. That's also known as IMIP, and this is a substantial saving when it comes to closing costs. Initial MIP is rated at 2% of the property as long as it's valued under the lending limit. So if you have a $1.2 million home, you would pay 2% of that, or $24,000 at closing. This could be a substantial saving for customers who are looking at the jumbo reverse mortgage because there's no large fee to pay upfront to the FHA. The next key difference between the jumbo reverse mortgage and the HECM is that jumbo loans have a lower age of eligibility in most states. So if you're looking at getting a jumbo reverse mortgage and you are only 55, you may only be eligible for the jumbo option. That's for almost all states. Now, there are some exceptions. If you're located in Texas or North Carolina, the age of eligibility for the HomeForLife jumbo will be 62 years old. The next big difference between the jumbo reverse mortgage and the HECM is that the jumbo reverse mortgage doesn't have any initial draw restrictions. Now, this is known formally as the initial disbursement limit. And we're going to be getting a little technical here, but I think it's an important point to understand that the jumbo loans allow you to access all of your cash proceeds at closing, whereas the HECMs may cap you. Under the HECM loans, you may only be eligible for 60% of your principal limit or your mandatory obligations plus 10%, whichever those two is greater. It's difficult to say exactly which case you fall into here, but suffice it to say that you may not be eligible to access all of your proceeds in the first year with the HECM loan. On the jumbo loan, on the other hand, it's really easy. If your principal limit is, let's say, $500,000, then those $500,000 would be made available all in the first year. If you're curious about what you might be eligible for, you can follow the link in our description, and we have a HECM reverse mortgage calculator as well as a jumbo reverse mortgage calculator where you can kind of see both options side by side. So that wraps up our deep dive on the jumbo reverse mortgage. I hope this video was helpful. If you have any questions, feel free to leave them in the comment section below. We'll be getting back to you. We look forward to helping you, and have a great day.